Okay, we are live. Good afternoon, everyone. Scott Tucker here with US Vet Wealth TV. Welcome to Military Retirement Live. I am here with one of my first military veteran entrepreneur entering this crazy world of finance and entrepreneurship, trying to do things differently. Patrick Weinert, author of The Money Mission, a founder of The Money Mission. And Patrick, I mean, we haven't spoken in maybe hasn't, I think it's been less than a year, but still, I know your audience and everything you've been doing has been growing ever since we first met. Gosh, maybe it was 5 years, 5 years ago already.
Yeah.
Yeah, three or four,
I think it
five
was
years
4 years
ago.
ago. Yeah.
So we've been staying in touch and kind of watching as we grow. And what I like love about what you do is offering a very specific financial coaching program for people who just want to all things money. Really is what I kind of understood about what you were doing, and just try to meet people where they're at, understanding a lot of military families kind of get set down one path, and rather than go to a financial advisor who ultimately is going to sell something to them. That's technically, I'm a version of that. That's my business model. You took a bigger step that I, I don't want to encourage other military retirees to make, but the bottom line is if you're going to get a pension, you have flexibility to maybe go try something out. I don't, you'd already written some books while you're active duty and getting into this, but we'll get into the topic we wanted to talk about today. But tell us a little bit more about what you're doing, what you're up to. If there's anything new you want to, update us about, and yeah, we can kind of dive into things a little deeper.
Sure. Thanks for having me on here again, Scott. It's always great to talk to you. I mean,
Yeah.
this is great just to have a conversation with you and get caught up. And
Yeah, that's what I figured. I figured because we could do this. Like, I know I started that like it was an interview style, but like I told you before, I really don't want it to be like that. It's just kind of how
yeah,
you're almost forced to do this until we get used to it. But yeah, I just want to catch up, and at the same time as us catching up, part of networking is let people know what the resources are available, and it's like if you can catch up with me, I want people to know about you. So let's catch up a little bit more openly.
yeah, yeah,
So,
absolutely.
but
So yeah, lately, so like you mentioned, the Money Mission really is designed to help military and veterans, active duty military and veterans, achieve a level of financial freedom and financial independence so that they can do what they want to do, right? So that they aren't necessarily tied down by employment. Now, I'm not saying that, that's obviously a long term goal for a lot of them. And I do help people that are not military too. Um, but you're right. The approach that I am taking with the Money Mission, or that I've taken, has been really one more of financial education and less a financial advisor, if you will, like a
mhm.
standard financial advisor, right? Because we know a standard financial advisor, which is definitely a needed profession. It's someone who comes in, it's done for you, right? They take your money, they
Yeah.
invest it. Unfortunately, sometimes it's coupled with somebody trying to sell you something like life insurance or some sort of insurance product, which, again, unfortunately, sometimes it's something they're trying to fit you to their product. Um, Whereas what I'm doing is mine is entirely focused on educating the service member,
Mhm.
and doing it in a way where I'm kind of educating myself out of a job, right? So I'm educating them to a point where they
Yeah.
literally could do it on their own if they needed to at some point in the future. And it's empowering them. And that's the thing for me that's fulfilling about my work, is that it's empowering. It's
Mhm.
fulfilling to me because I see the light bulb come on with so many of my clients, and it's a really great feeling to see that, to know that they get it.
Yeah, dude. I mean, that's honestly why I stumbled into being a financial advisor, and I got out and transitioned. Hey, it sounds like a good job and all that.
Right.
And it's exactly that. It was a few years into it, and I realized I'm not empowering these people because they come back to me a year later. It's either the same problem or the same questions, or I don't get what this. And I would be frustrated. I'd be like, it's your money.
Right.
And why aren't I don't know. I get you're not supposed to pay. It's my response, but it's not my response. It was just this weird thing. And finally, I kind of lost all integrity with it. And I was like, don't call me a financial advisor. Who am I to give you advice? It's your money, right? What I can do is, since I was in the industry, um, and kind of what led down this path was more of the like, well, I happen to learn a few things. I have the licenses and the access to these things. But I love the way you said that, because what I'm trying to do with the insurance thing is, yeah, anybody can buy. That's the problem with the financial industry in general. They're selling fear. Oh, you might die. What's going to happen to your family?
Right.
Or you might not save enough for retirement. in the things. But
Right.
nobody asks the question, especially among the military families, is, well, what if you did? What if you don't die? What if you did do the right things financially? Um, why not learn how to use life insurance? In my example, why not learn how to drive it? Learn how the software works, versus just I have a guy for this or a guy for that. Whatever.
Right.
And obviously there's needs for specialists and that kind of stuff. And I think that's where a coach, to decipher all. That's what I hate about. I think that's part of the reason that the financial advisory industry can say they charge the fees and stuff, because there's so many different things to decipher. And so there is a trade-off. Do you want to learn it
Right.
or do you want to outsource it? No right.
Right.
There's no right or wrong.
Right.
But I think what happens, and this is another thing I am a little envious of you about, is you're not afraid to get on the social medias and say something a little bit different than folks, and deal with the comments and the stuff. And I think where you came in smartly in this is not going to be the licensed professional that gets compensated only or primarily through fees or commissions and stuff, because that's the typical thing that would come back in an argument. Every time I used to leave a comment in there, it's just like, oh, you're just trying to make money off of veterans. And I'm
Right.
like, yes, yep, because I'm a veteran too, and
Right.
I get to earn an income, right? I'm out in a service. It was an automatic, you're this or you're that.
Right.
And I got sick of being labeled and stuff. So I just really appreciated the fact that you're willing to do that, and you even coached me up on that. It's like, Scott, you should be able to do that. But again, the thing that kind of stood out in the last week or so, obviously we got a lot going on. I mean, geopolitically recently, let alone the last 2 years. And you mentioned how, hey, there's a lot of, let's call it, misinformation or misunderstood information, or what, and of course different perspectives on
Of
things.
course.
Really, that this is all about. So that's what I appreciated about recent topics and stuff. And given I don't follow the markets on kind of a regular basis, because I am kind of doing more of the long term type big picture stuff in our designs or our strategies. Yeah, it just stood out to me, man. Like, lay it out for us. Like, what's important right now that folks aren't talking about, or just
Okay.
or whatever. And I'll teach me. Seriously,
Yeah. Okay.
update me.
So I think, and you can correct me if I'm wrong, this may be in reference to the post that I put up recently on social media, and I did
Hmm.
get some heat for it, about us entering, a market crash. And that's something that I think most people don't want to say. You don't want to say that, because then it's like you're trying to instill fear, or you're trying to, sell a product by instilling fear or something like that. And I by no means am pushing a product I'm selling. I mean, I am offering my services as a coach, but it isn't related to what I'm talking about. Like, this is stuff that I just want to educate. And to be honest with you, Scott, and this, if anyone's watching, the way I set up my business, I'm actually doing it in a way where I can really help people who have money and are able to afford me. But then I want to take what I have and offer free resources to people that can't afford me,
Hmm.
to people who maybe don't have money, maybe lower middle class, maybe even those in poverty. If I can help them and they can take my stuff and use it for free, I think that's awesome. And I'm going to try to provide that. And I tried to set up my business model in a way where I can be, my business can be sustained through the work I do with those who can't afford me, in order to support those who can't.
And they get
Um,
that, right?
yeah,
I think a lot. I mean, that's one of the things when you are in business and sales and marketing. A lot of times they say, give your best stuff away for free,
yeah,
because the ones who
absolutely.
appreciate it will happily pay you for more. Even if you don't necessarily have more, there's always a more customized, personalized thing that when somebody wants it and they understand the trust and that stuff. So I think it's an awesome business model. It fits in with the altruism, that is expected of people in the military. Unfortunately, part of that is everything should be for free,
Right,
and
right,
usually free stuff isn't always necessarily the best, but
right,
it can
right,
be
right,
useful.
right.
So all those things. I appreciate you kind of laying that out.
Yeah, I didn't mean to get off topic there.
No,
You did ask
no,
me
no. I mean,
specific.
it's relevant from a perspective standpoint of kind of what you're coming and what you're in this for. Like, why would you make a post that draws heat? Like, I'm not
Right,
trying to like put that on blast at all.
Yeah.
I'm trying to say to veterans and people in transition or active duty military, like it's not, when you're in the military, there's orders, there's uniform, there's regulation. Everybody should be the same.
Yes.
That shouldn't be how your personal life is. And what's the money? You're just doing the service to get the
Right.
money. That's part of it.
Right.
Um, that's your chance to actually do what you want. And
Right.
I think kind of we get led down similar paths a little too
Yeah.
often.
But to follow on your original question, I had brought up that recent geopolitical events, right? The Russian invasion of Ukraine is significant. It's significant for us for a variety of reasons. Um, and the reason I brought it up was because I said that it potentially is setting in motion events that are going to affect the investing landscape. And by that, I'm referencing what we have here at home. And so right now, to give people some background, for those that don't follow the markets, for those that aren't as in tune with it, our central bank is keeping our interest rates relatively low right now. And it's doing that to support the economy. When it
And
raises
they've been doing
interest
that
rates,
for a long time, right?
it has been, right. Now,
Since at
it's
least
doing that
2008.
it's doing that purportedly to support the economy. The truth is that keeping rates so low for so long is actually not good for the economy. But what it does is it essentially forestalls the effects of recession. And the reason why they do that is because those who are in power don't want to have to deal with a recession right away if they can help it. They want to prevent it, or they want to postpone it until the next people get in charge, because then it'll be their problem. And I know that sounds selfish, but that's generally the way they behave. And they're doing it also because they really believe it's the right thing to do. At least many of them do, right? A politician or a central banker, they're looking at getting reelected. They're not necessarily looking at the long-term success of a society or culture or a country even. And so that's kind of one of the drawbacks of elected government. Again, I'm not saying elected government's all bad. I'm just saying there are advantages and disadvantages.
It's called human nature, an
Right.
incentive.
Right.
Study a little bit
So,
of psychology and realize what motivates people, even if they think they're doing it for the right reason. Ultimately, underlying there's human motivation. You can't get around that. Let's acknowledge it and understand that's the
and
reality
understand
of
it.
it. Yeah.
Exactly. That's exactly right. And so due to the recent events geopolitically, my belief and prediction is that our central bank is going to keep rates low. There's a lot of talk in the news that they're going to raise rates. There's been talk in the news, and that's actually caused some market turbulence, right? That's caused the market to come down some, because rising interest rates generally aren't as good for businesses, because it increases the cost of borrowing for a business to continue operating. It increases the costs, various costs, in indirect ways too. And so that essentially squeezes the margins, and that causes a business to become less profitable, generally speaking. Not all businesses, but some. And so it has that broad effect. But if they're going to keep rates low, what I'm predicting we're going to see now is we're going to see a continuation of the high inflation that we've been experiencing over the last year. It's going to continue, and it's probably going to get worse. And the reason why is because we're keeping rates so low. When, essentially, if we go with the government's figure and we say, hey, inflation's running at 7.5% right now. And if you put your money in the bank and you're getting nothing, or 1% if you put it in like a high yield savings account, right? You're losing 6.5% a year on your money, right? So you don't want to be in cash. Like you only want to have that as like your emergency fund. You don't want to be investing in it because you're losing. Right now, you're not losing in nominal terms, but you're losing in real terms. And sometimes people don't understand when I try to explain it. It's like at the end of the year, you might still have your $1,000 in your savings account, but you can't buy the same amount at the end of the year than you could at the beginning. And so even though it looks safe, it's insidious, and that inflation is eating away at the purchasing power of your savings. And so what that does is that pushes people to buy investments. And so they'll buy lots of things. Now, what I am predicting is if inflation continues to get worse, you're going to see a rotation out of a lot of the high tech speculative investments and into stuff that is, dare I say, boring, right? Kind of the more long lasting companies and businesses that produce value right now, right? So
Is that the blue
companies that are,
chips? When they say blue
yeah,
chips or
yeah, blue
value
chip,
stocks or
yeah, value, exactly. It's a shift into value. Value will become the safe haven. By that, we're talking about stuff like agriculture and healthcare, right? Everybody's got to eat. Um, a lot of the food grocery stores, the big names, a lot of retails, consumer staples, utilities, right? You can cut back on water consumption and electricity some, right? You can cut back on driving some, but everybody's got to eat and everybody's generally got to put gas in the car. So there are certain industries that are going to have what we call pricing power, right? So even when prices are rising, they're going to be able to raise their prices too and still have customers.
hmm
And so those are the businesses that you want to be invested in. A lot of the highly tech focused, innovative companies, right? The ones that we heard a lot about during the lockdowns, right? So it was like Ring Central and Zoom and uh,
Peloton. Peloton
Peloton,
was a
right?
big
Yeah, a lot of
WeWork. WeWork was a quote unquote tech company, and they fell apart. Got it. So there's a
yes,
couple examples that haven't done so well after being the quote unquote unicorns, right? That's the term in the startup world. And just real quick, kind of how unicorns work is, they might have a whiz bangy widget idea, typically software related, tech, and that's easy to sell to investors. Investors are always looking for the next unicorn because that's how they make their billions. And so all of a sudden, tons of money gets thrown into these startups. And so now they have millions in which to throw at Facebook and Google ads.
right,
And it's quite easy to drive up user base. And so that's how the valuation of these companies, and that's what basically drove the stock prices of these companies way up. But a lot of them never made a dime.
right,
Right. And now Amazon did that strategically. Bezos was a genius. The rest of these guys aren't Bezos. Like
right,
they keep on thinking they are.
right,
Right.
right.
Okay.
And I think that's what's important to know is that I'm not trying to speak down of the innovation or say innovation isn't good. Obviously, it's very, very important.
Mm.
But it's also important to recognize that most companies that try to be innovative, most of them fail. And so, if we think back to even 100 years ago when the automobile was starting to come of age, there were a lot of automobile companies that failed. You don't
Oh
hear
yeah.
about them though.
Yeah,
You
yeah, that's
know,
a good point.
there
Hey, there
there
was one called The Tucker. Remember that movie?
yeah, you know, or even during the internet boom in the 90s,
Yeah.
obviously we're more familiar with that because it's within living memory for us. But, even maybe a lot of your younger viewers who didn't experience the dot-com bubble, or the idea that, it was just going to totally change the world, which it has, but most of those companies failed. It's the same today. And when you invest in a lot of these technology indexes where they have all these different stocks, a lot of these companies they don't like you said they were never profitable, and that's what's different today is a lot of these companies today the traditional view, the traditional way that a business would go public, right, would offer an IPO, would be you were a profitable business and you demonstrated your profitability to the market, and then in order to scale you offered a public offering, right? Today, it's the opposite. Today,
Mm.
companies come out, they've never made a profit, and they say, hey, we're going to go public. And they sell all these shares. And even when they're public, they don't make any profits.
Yeah.
And the price continues to go up, and the investor continues to get, I don't know, wooed by rising stock prices, right? And that is not really the way you're supposed to invest. You're not supposed to say, well, is the stock price going to go up? I mean, yes, we do want the stock price to go up over time, but you want to invest in a stock like a business. You need to think about it like a business. If they shut down the stock market for 10 years, would I still want to own this business? Is this a business I would want to own? And if you can say yes, then you should buy that. You
Mm.
don't buy something hoping the stock price is going to go up tomorrow.
Yeah.
And that, unfortunately, is that speculative mania that we've seen now. And I, I know with some certainty is going to come down, and inflation is going to do that
Mm.
because what inflation does is it forces people to recognize: Am I able to make a profit relatively soon? If I
Mm.
can't, if it's in speculative, and say, we have this new technology that's going to be great, and but we won't see a profit for another 2 or 3 years. if inflation is raging at 7%, or if it goes higher, investors are going to be a lot less likely to do that because they have to give up all that money over that time. And so those stocks are going to crash. And that's why I was saying what we have seen set in motion now due to the geopolitical uncertainty, I believe is going to lead to this, but it takes time to work out. And you're going to see it over the course of this year. It's the beginnings of it, at least.
Yeah, so that's interesting how you brought up the stock. I mean the tech aspect of it. And so just to kind of backtrack and summary or review real quick. So the thoughts are that you know interest rates or otherwise we're dealing with inflation, and typically because the market's been rising, people are a little bit more speculative. Just kind of honestly, maybe it was people just until inflation came and it really started hitting the pocketbooks that they weren't paying attention and just assuming
Yes.
everything keeps going up. And this is the first time that they heard something that when it goes up, it's bad.
Right.
Right. And it's like, wait a minute. I never heard about this thing before. They always mentioned inflation, but it's always 2.5%. That's what they put in the
Right.
financial planning calculators. 8%
Right.
per year from the S&P 500 and 2% inflation. It works out every time that way. And so it's
Exactly.
another reason I left the industry. I was like, this math isn't real. Um,
Right.
but so so let's back up a little bit to before. So, okay. So I was right there. Just kind of basically they're going to be a little bit more conservative, let's say, with being speculative. Like maybe I need to, pull this money. So money coming out of the tech companies, which weren't making any money anyways. So that's going to kind of compound the problem and potential for a crash there. Now, all things totally unpredictable. Maybe the Federal Reserve just prints money out of thin air again and throws it all at Google just to save them. Bailouts, so that's what bailouts are. Okay, well, what does that cost? So this didn't all just happen last week when Russia decided to knock the door on their little
Right.
neighbor, right? This has been going on
Right.
for 2 years. No,
It's
it's been going on for way longer than that. It's just
right.
so what is it, 40% or is it 60% of all dollars created were created in the last 2 years,
It's
right?
some astronomical figure. I believe you're right. I think it was 40% in the
I,
last 2 years.
I always save graphs when I see them on Twitter and stuff, and mean to bring them up here, but I don't have any, handy right now. So okay, so the inflation aspect of it, whether it's coming from all the printed money, interest rates, these are things that usually they're only looking at one of the variables, and now it's kind of modern monetary policy or whatever, and so now okay, let's get into what's happening here. So, how do we typically pay off debt? So we've created all this debt in our country. It was already always there. It was always crazy, and now it's so astronomical. People can't wrap their mind around. So now they've completely just ignore it, which
Right.
is almost hilarious. But if it wasn't so sad. So, but what we've always said, in our industry is typically like, well, all right, if it's not so much about what your returns are on the stock market, it's more about what your returns are after taxes. Because separate from fees and all other stuff, the biggest cost in your lifetime is going to be taxes. And so some of the thoughts are, and often, and this is what I wrote about in my book, Veteran Retirement Rescue, is
Great
the
book, by the way.
idea. Oh, thank you.
Yeah.
And so what I was saying there is because I saw a great, presentation once, a guy talking about the demographic, saying there's way too many baby boomers. Baby boomers are leaving the workforce, so they're going to start drawing down on their money. And there aren't enough millennials entering the workforce making enough money to basically, when the baby boomers sell off their stocks for income and retirement, there aren't necessarily enough people to buy up those shares, and therefore, supply demand, that could affect the cost. So that could, potentially be a compounding thing to bring the stock market down. So these other things compound that. But the other aspect I talk about is this taxes thing. So those baby boomers, are going to have to pay a lot of taxes on that money when it's coming out. But at the end of the day, they're paying today's tax rates, and let's blame it on the baby boomers for probably being in charge of most of this debt that was accumulated. So how do we typically pay off the debt? Well, it's those taxes, right? And the assumption is taxes are going to be higher in the future to pay off all this debt we created. And so the baby boomers won't eat as much of that tax. And it's going to be, down on our generations, the younger generations, to eat that tax. But there's another trick up the government, the Federal Reserve's sleeve. You can get rid of debt by just inflating out of it.
Right.
That how that works takes a little bit more to wrap your mind on. Are you able to tackle that and explain how
Sure. Yeah. No
inflation,
problem.
how does just creating all this money inflate away
Yeah,
the
inflate away the debt.
the
Yeah,
debt? Yeah.
it's a great question. And you brought up a good point too, Scott, earlier about how the crash that I'm talking about is there. I do believe it's going to be a crash in nominal terms, like the actual prices are going to come down. But more importantly, it's going to be a crash in real terms. So even if the market grinds sideways for 10 years, at the end of those 10 years, inflation, or I shouldn't say inflation, I'd say price increases will have eaten away at the purchasing power of those investments, right? A previous example is in 1966, the Dow hit 1,000 for the first time. So that means you could have bought a share of the Dow for $1,000. But then it moved sideways for about 15 years, right? It was up and down. But during those 15 years, we experienced some of the worst inflation in our history. The Dow hit 1,000 again in 1982. In 1982, you couldn't buy the same amount of stuff you could in 1966. Like in 1966, you probably could have bought like a car.
Yeah.
You couldn't buy a car in 1982 with $1,000.
A house for $10,000 or something like that. Is
Right.
crazy. Yeah.
So, and I realize that's, way before most of us were even born, but it's still telling in the sense that, yeah, the nominal amount stayed the same. But in real terms, if you were in the stock market, you were a loser. And that was over a significant period of time, 15 years, right? If you look at the Great Depression, again, we can also say, hey, the Great Depression was just an anomaly. It was something out of the ordinary. Well, or even look at modern day Japan. The Japanese stock market still hasn't recovered to its 1989 high, right? That's over 30 years.
Really? It's still been that. I mean, wow.
It's still low. It's
and that's when the 80s, when they just came out with the cars and the Toyota, and they were supposed to be
right.
the new economy. They were going to take over the world.
Yep.
And look how quickly it shifted, and they still aren't back yet.
So I'm saying that's why whenever you hear, oh, the stock market always goes up, that's not always true. And so, what's the famous adage? Past performance is no guarantee of future results, right?
Exactly.
So, to answer your question, though, I kind of went on a tangent here. To answer your question, the way inflation works is what happens is the federal government will borrow money by issuing bonds to the public. So they'll go to the public and they will borrow money from the public with these bonds. Okay. So they sell the bonds to the public, they get the money from the public. Okay. That is how they're able to finance all of these things that they want to do. Now, the people pay them the money, and the people now have these bonds. But the bonds themselves need to be sold to somebody, right? If nobody's going to buy them, then they're not going to be able to, they're not going to be valuable. Those bonds are bought up by our central bank. So the central bank goes into the bond market and will buy these bonds. And in order to buy these bonds, it just creates the money from nothing. Mm-hmm. That's why we have an increase in the total amount of money in circulation. And so it'll buy these bonds, and that's what we call about increasing the balance sheet. Whenever they say the Federal Reserve or central bank's balance sheet is increasing, essentially means that they're creating money from nothing and they're buying assets in order to prop up the market. Mm-hmm. So as you can see, that money that they're creating from nothing to buy the bonds from the public, that the public lent money to the government, that's the way the government is able to finance all of its borrowing. So it's financed through the creation of money from nothing. We call it money printing, right? But now in this day and age,
qualitative easing was a
we don't actually have to print it anymore, right? We can just add a zero to the end of the digital numbers on a screen somewhere, and that's how we're increasing the total amount of money in circulation. That is the primary reason why we see persistent inflation across all market sectors. So obviously there's price fluctuations in any economy. Prices go up, they go down based on supply and demand. But when you see persistent and enduring inflation, and I say inflation, I'm saying rising prices. When you see persistent and enduring rising prices across all market sectors, it is almost always a monetary phenomenon. It's because we're inflating the money supply. And that actually is the original definition. Inflation really isn't rising prices. That's an effect. The inflation is the increase of the money supply.
Mm-hmm.
And the increasing prices is an effect of inflation. But the way they've done it today, the way modern economists and the powers that be, they've kind of turned it on its head and say, well, prices are rising, and they'll find a whole host of different reasons to blame it on stuff other than them, right? Supply chain bottlenecks or COVID, or, there's some other reason other than them. They're the actual cause, or, greedy corporations. That's one of my favorites. It's like originally or recently, and I actually spoke to them, or I sent the messages. There were a number of our leaders who came out and criticized grocery stores for raising their prices and said that they're gouging the customers. And I said, if you just took a moment and researched the situation, you would see that, yes, they're raising their prices, but they are not raising their prices anywhere near what their costs are going up. Their margins are getting squeezed. They're trying to retain customers. And yet they will get the heat, right? They'll get the criticism. Oh, it's these businesses that are causing this. And in reality, it's because of all the money creation that's taking place.
Yeah.
And it's much easier, really, it's what we call an inflation tax. It's much easier to tax the populace with inflation than it is to hike taxes, right? Because you got to get the Congress together and got to vote on it. And I'm actually voting to take your money. It's a more honest way of doing it, but it's not a popular way of doing it because you're not going to get reelected, or you're not going to curry favor with your voters if you're proposing you're going to raise taxes on them. You'd much rather do it in an insidious way, right? Borrow the money, have the Federal Reserve print it, and then blame it on greedy corporations or supply chain bottlenecks. Now, I'm not saying that supply chain bottlenecks don't exist, right? But that is not the primary cause. You don't have supply chain bottlenecks lasting for years and years and years. They don't last for multiple years, and we just can't figure out how to clear these.
Right.
So it is a complicated issue, and it's difficult for a lot of people to grasp. And I really do believe that most still haven't woken up to the fact that inflation is here to stay. As soon as the market starts to wake up to that, you're going to see a move in a significant way into a lot of the value investments that I've been talking about. People are going to be moving out of the more speculative and into the value.
Yeah.
And when that happens, it doesn't even have to be a majority. It could just be a significant minority.
Actually, that's what they call the smart money.
Right.
Follow the smart money. And so, I mean, the underlying version of inflation. So we've been talking, standard stuff, groceries, gas is caused prices to go up. But the printing of money, as you said, is creating price rises. Well, that goes for all types of assets. Price rises. Hint: the stock market since 2008, when they started doing bailouting banks. What did the banks do with the money? They bought their own shares back, which inflated their share values, right? So everything since 2008 has basically been like this, straight up. And so smart money has been waiting for the day when they're like, okay, I think we pulled this off a little bit longer than we thought. And so they basically sell out now, capture all those profits. It might be inflated profits. They don't care. They're the first ones. First mover advantage type of approach, right? So I think that brings me to my next big question for you. When it's kind of my wheelhouse. When I'm not like following the daily, I've been in meetings and exam all day. I don't even know what today's markets did after the invasion. Any quick report on that?
I know that the market has been very turbulent, right? If we're just talking about the broad indexes, it's been up and down. Today, I believe it was down. At least the broad market was down slightly. I know that it's been volatile. I know initially it was down a lot due to the uncertainty. Now that there's, I guess, a little bit of a stalemate, or at least the invasion is not going as the Russians had planned, or maybe as the world had expected, there's a little bit more volatility and less of a downturn. Um, my belief, though, is I think a lot of the reason the market hasn't been coming down as much is because there's a belief that the Federal Reserve is going to keep rates low because of the uncertainty. And
Yeah.
that's, you know,
Or they could, print more money and
yeah,
keep kicking this can down the road. I
right,
think, you were saying you cut heat because you can't predict that it's going to crash tomorrow. It's like that's not the point. We're
right.
just looking at, and it's not even
Trends.
about the market. I'm actually more worried about much bigger crashes. So again, that kind of gets me to the next thing. And you mentioned it. Printing money isn't quite what it once was in
Right.
a definition sense. So have you heard about Project Hamilton?
I have not heard about that. Please clue me in.
This is where I think things are going from a bigger perspective. So I pulled up this graph real quick, just to illustrate what Patrick was talking about, the value of the dollar. Once I saw this, I always remember to bring this one up because it just shows it right there. The a dollar is not a dollar. It's like literally cents of the dollar, even though it's just a piece of paper and stuff. So let me Google this real quick. Let's look at Project. You probably have heard of it. You just don't remember because obviously they didn't talk about it a whole lot. So the Hamilton Project. Not the Project Hamilton Project. Ooh, wow, it's not even on the front page. That's interesting. Here we go. This is the one. Not even on the top one. Project Hamilton. This is from MIT,
Okay.
and they are in collaboration with the Boston Fed and all of these big money, PayPal, ING. I'm sure there's more into it. CBDC, Central Bank Digital Currency. I think this is what it's all about. They don't care about the inflation because they're just going to
Right.
make it all disappear.
Right.
And basically, when people start talking about, because basically this is the idea for, oh, there's Bitcoin, but we'll make Bitcoin illegal and this. And, people think Bitcoin or cryptocurrency is an asset class. And what the real deep Bitcoin people are saying is, no, we're trying to create another means of financial transactions and communication with each other that isn't tied to whatever could happen here. And I got to look into it more about how this affects or how this might affect those things, the interest rates, the printing of money, all this stuff, because if this becomes the replacement of the dollar, they're going to call it a digital dollar. I mean, other places have already started to do this. We don't have to. I mean, I'm curious if you have any upfront thoughts. If not, no big deal. But I just thought, kind of all the things we've been talking about. This came up a couple weeks ago. This is very new. Been hearing about it a little bit. Most people are saying it's probably one of the way bigger change than the gold standard when Nixon took us off the gold standard or the Bretton Woods agreements. I think it was 46 when they tried to change it. And of course, it goes back really to Jekyll Island in 1913 when they created the Federal Reserve altogether. And every time those things happened, when it came to the value of your money, and more importantly, the ability to use your money for value, basically got took out of your individual hands more and more and more. And this is kind of the next version of that. So, any guesses on what this might be all about?
Um, well, obviously, we've now had digital currency with us for a number of years, and I know that it's, definitely a very popular.
Mm-hmm.
It's kind of a sexy investment, right? It feels very technologically advanced. Um, as far as this is concerned, as far as the Project Hamilton, um, if the federal government wanted to move us onto a new currency, it would have to do something in a way where it was very easily understood,
Mm-hmm.
right? Because if it was very easily understood and they were able to move us from one to another, people, when you talk about money or you talk about currency, people need to think in a currency, right? We think in dollars, at
Yeah,
least here
that's
in
a
the
good
States
point.
we do. And they think in euro in Europe, and they think in yen in Japan, We think in terms of dollars when we think of prices. And they would have to move us to a new framework in order for something like this to work. Is that possible? Yes. I don't know. I mean, I don't know that it's necessary because, I mean, and to a certain degree, the dollar is already digital, right? I mean,
Yeah,
it's unusual for people to be going around handing out cash anymore. I mean, I still do, but I'm old school. I like to hang out with people in real life.
yeah,
And, so, I'll pay with cash and I know others who pay with cash, but that's not that common anymore. And so most people want to use Apple Pay or they want to use something that's easy. And I don't know that it's necessary to move us onto a currency because the dollar sort of already is digitized.
yeah,
Uh, but if they did something like this, it would have to be something that was very easily understood by everyone. And that's why it's a very challenging thing to do.
yeah,
Um, Bitcoin, digital currencies, they're an interesting concept. I will say that blockchain technology has definitely has a lot of potential. I mean, I can think of a number of different ways that it is going to be able to serve us. But as a currency, as money,
hmm
I don't see it working. And the reason why is because all I see in the market with digital currencies right now is I see them being touted as something that they're not, right?
yep,
Everyone says, well, it's going to be the future of money. Well, what is money? It's a unit of exchange, right? A medium of exchange. It's a unit of account. We think in that. It's a store of value. And I use an example of Bitcoin. I say, is Bitcoin a medium of exchange? I mean, I don't buy anything with it. I don't really know anybody else who buy it. We don't really use it like money. It's not really a unit of account because I don't measure things in Bitcoin. It's certainly not a store of value, even though a lot of its proponents claim it is. Because I mean, what are you storing? You're literally buying nothing.
yep,
Um, so it's not really any of those. And all I hear about it is, well, you have to buy it because the price keeps going up, and it's eventually going to become money. And so everything that I hear about it is it sounds like the ultimate bubble. Like it sounds like it's all I'm hearing is hype. And and as a result, and if I don't agree with it, there must be something wrong with me. It's kind of like, remember that story, The Emperor's New Clothes?
hmm
I don't know if you remember that. I remember being
yeah,
read that as a kid. And this reminds me a lot of that because it's like only people with very high IQs can understand the value of Bitcoin. Stupid people like me can't. And so, you know, only if you are able to understand that, or should you invest in it. And so the rest of us rabble shouldn't.
right,
And the thing with it is that it's the story on it seems to change as we progress. And the reality is the vast majority of people that I know who invest in it, it's like they want to get rich quick. That seems to be the real driver of it.
yeah,
Not that it's actually going to be money. And so I always approach a lot of these digital currency questions as asking, what problem is this solving? And frequently I will hear, well, Bitcoin or digital currency is solving the inflation problem. But how is that solving an inflation problem when the price of that asset is going up and down by 3, 5, 10% a day? I mean, that is not something that's stable and useful as a currency. And so that's why I really view Bitcoin as kind of it's just a digital token. It's like this highly speculative digital token that we don't really know. I mean, it isn't really
hmm
tethered to anything. So it's selling at $1,000 is just as realistic as it's selling at $1 million because it's just not,
right.
it's whatever somebody else is willing to pay for it.
Yeah, it's the tulip craze back. The
Right.
Dublin. I mean, the Dublin, uh,
In
Netherlands,
Dutch.
Dutch.
Yeah. And here's the thing too, is that keep in mind, a bubble can stay in existence for a long period of time.
Sure.
Just because it's been around for 12 years or 14 years doesn't mean it's not speculative and it isn't a bubble,
Yeah,
right?
look at the Soviet Union,
Right. Yeah.
or America soon, maybe.
Right.
But and I think those are very valid points. And what isn't said enough, that and I'm getting this again, not from claiming any expertise or really even have an opinion. I follow one of the guys who's one of the main crypto gurus, whatever. I took his intro course or whatever to learn about, because he talked about it differently. Because the one thing he keeps on saying on social media is, hey, because I mean, he's one of the gurus, but he's like, hey, everybody, it ain't money. Stop pretending like it's money. It's
Right.
not a fiat currency. It's not that. It's a technology. The blockchain is what this is about. The Bitcoin part of it is a way to. It's honestly no different than Venmo. It's just a means to transfer. It just
Yeah.
it's
It's a
tied to
method
the
of payment.
hash. Yeah, it's tied to the hash and the algorithm, but it's not necessarily secret as everybody seems to think it is.
Right.
Um, and the value thing of it could be completely not even a part of this at all. It could literally just be a secure email service. What makes the blockchain different is that there are and this is what this guy was talking about, um, is really, this is more of a new, I mean, think about when the printing press first came out and people didn't understand the concept of newspapers yet, and so they went and created it, and then there was magazines, and that led to the internet and all this kind of stuff. It's what can you actually do with this technology, of which Bitcoin is a part of. But even a lot of these other cryptocurrencies are simply just derivatives of Bitcoin, and they just call it a token, and then they add new marketing on it. So it really gets back to the sales, persuasion, and marketing thing. New shiny object, supply, demand. Throw money at it. Yeah, it'll have value as long as they do. But I mean, I think China just outlawed cryptocurrency and stuff.
Right.
And so here's the difference with the Project Hamilton digital bank currency. This digital currency is actually meant to be in currency, and there's no blockchain. And that's the main thing. So all the quote unquote protection. So now when you could have that dollar in your hand to go buy coffee, it won't even be an option anymore. And since there's no necessarily blockchain technology, essentially the technology is the government that, maybe you do something somebody doesn't like, they could
Right.
literally turn off the digital dollar.
Right.
That's, I think, the bigger concern, and why people use cryptocurrency. And this is something I can understand as, in that regard, to some extent, a store of value, as long as there's a place to transfer money. If essentially, whether it's inflation or, I mean, I had the California tax authority go into my bank account, take out money on my bank account, claimed I owed taxes 2014. Well, I lived in Germany in 2014, but they did it anyways. I mean, they eventually sent it back, but it's like, that was a big wake up call for me. And there's two places that you could have money that I know of that they couldn't necessarily do that besides real estate. Can't do that with life insurance, and can't do that probably with crypto. I mean, maybe they could though with crypto, and who knows? That's the problem. There's not real rules and regulations around it. But anyways, we don't have to go down the crypto rabbit hole, since we're really just speculating. But it's fun. It's fun.
It
And we
is.
got to start. We got to start somewhere. And
Sure.
there's lots of different experts who are going to get into different versions of it. I'm happy to talk about it as well, and keep learning. And if something has a potential for a profit and you want to throw money at it, to each your own. So I'm invested in my business versus throwing money in the stock market, all sorts of other stuff. But I wish once profits roll in, like, I'll throw money at Bitcoin. Like, I don't know, compared to the dollar, who knows? But no, very cool, Patrick. Well, hey man, well, awesome, dude. That's been an awesome, fun conversation. Great catching
Absolutely.
up.
Great
And
talking to you.
and dude, your insight is just so calm and smooth and useful,
Thank
and
you.
you just do it in a different way than most of us who are like me are getting all excited about stuff, and so, but
Thanks,
or
Scott. I
too
appreciate it,
excited.
man.
But no, absolutely. Well, hey man, well, tell us where people can find you, anything you got going on, you want to promote,
Sure.
so on and
Yeah.
so forth.
I am. So if you want to sign up for my newsletter, if you want to read my weekly newsletter that I sent out, you can go to patrickweinert.com and find it there. Um, you can also get a copy for active duty military or veterans. You can get a copy of uh, my short ebook on the first 8 steps to military financial freedom. That's free as well. You can find that there at my site, or you can look at my blog. Um, and if you want to send me an email, if you have questions or connect with me on social media, you can find me on Facebook, Twitter, Instagram, TikTok. I'm on TikTok now, even too.
Oh,
So,
really?
yeah, so you can find me in any of those locations, or just send me an email at moneymissionnewsletter@gmail.com, and I'll be sure to get back to you. So I really appreciate you having me on here, Scott. I will tell you too, we are going to do a this spring. We haven't set a date quite yet, but early April, we're going to do a summit focused
Cool.
on transitioning military,
Okay.
and we're going to focus on kind of that transition, as well as their personal finances, their career, their health. There's going to be a number of different things we'll touch on, and maybe we could have you participate in that if you'd be interested.
Sure.
So I'll be
That'd be
sure to
awesome.
let
Are you
you
doing
know.
it virtual or in person
It
or?
will be virtual.
Okay.
At this point, it will be virtual. I'd like to do a live event, and eventually I am going to do one here this year. I know, obviously since everything's opening up again, we're just working on the logistics of that. But this
Mhm.
one is going to be virtual for now. But I'll get back to you and let you know more, because I know your focus on SBP and your focus on that. It's such an important piece. It would be great to have you, talk a little bit about some of the people that would want to
Sure.
attend this. And to anybody here who's watching, or any year, if they're transitioning military, or maybe if they're already transitioned out or they're thinking about it and they want to attend, we're trying to hit on a lot of the stuff that you don't really get in those transition readiness seminars. You know what I mean?
Yeah.
And so yeah, so this is generally, it's going to hit a lot of different topics for people in that
Okay,
area.
cool. Well, yeah, definitely as you're planning it out, come on here and talk about the various things that we want to promote and stuff. And no, I think that'd be super cool. Hey, before I ever forget, as long as I got a spot downtown, I'm in a Gather. A Gather's kind of like a WeWork, just local to the area. But if you ever, obviously a lot of military stuff down here. So if you ever want to throw together a workshop or something, we can use one of there's a big conference room and all that kind of
Awesome.
stuff down in Norfolk. So definitely I'm guessing you probably have people, down here as well in your sphere of influence and
Yeah,
stuff.
yeah,
So
absolutely. We'll
very
take you
cool.
up on
So
that if we need to.
yeah, no, absolutely. So yeah, man. Well, cool. Well, thanks again for everything. Hey, sign up for Patrick's. I just realized I was like, oh, that's why I haven't been seeing you. I think it's signed my old email,
Okay.
the Vet Life one. I was like, I gotta sign up for that as well. Hey, amazing insight again. Like I said, I've known Patrick for. Unfortunately, we didn't know each other. We're in active duty, but again, kind of bumbling into this entrepreneur space, just trying to find our path and niche. And I've just of all the folks, I met a lot of great people, but just someone so genuine, doing it right,
Thanks,
slow,
brother.
steady. Really appreciate you having you in my circle, man.
Yeah, it's a
And
pleasure being a
great
part of
catching
it.
up. We got to do it more often.
Absolutely, Scott. Great to see you, man.
You bet. All right, everyone. If you got any questions, if you enjoyed this, I think this was an amazing conversation. Honestly, I learned a ton. It was a ton of fun. But ask, tell us people you want to hear of. If you got questions hear from, if you got questions for me, for Patrick, let us know. Send us an email, Scott at US Vet Wealth for me. Obviously, I put Patrick's newsletter email up there. But all right, I think that's good for now. Happy Monday, and let's try to stay out of a conflict, everybody, without
Amen to that.
making it seem like we're for one side. That's what I just quick caveat. Like, can I be pro-war without shoot? I mean, sorry, anti-war or against just
Right.
stumbling into stuff? Because I mean, we're talking about these fine, like all this goes out the window, completely out the window if we bumble into something like that.
Yeah.
But
Yeah.
oh well, let's pray. All right, on that, sorry. I'll shut off the live. But Patrick, stick around and we'll do proper goodbyes, and we'll
Sounds
see
good.
everybody next time. Take care.